Have you ever been told you don't qualify for a mortgage because you're self-employed, an investor, or you don't have U.S. credit? Well, you're not alone. And the good news is that does not have to stop you from buying real estate. Welcome back to Francisco's Key Insights. In this video, I'll be going over 4 non-traditional loans that are helping people qualify when banks are saying no. Whether you're building a portfolio or you're just trying to buy your first home, one of these could be your key to getting approved. And if you stick with me to the end, I will show you how to turn this short-term option into a long-term financial win. Let's get started. Let's start with the one that's changing the game for entrepreneurs, the bank statement loan. Whether you're self-employed, a freelancer, or even a gig worker, you must know how frustrating it is when lenders reject you just because your tax returns don't show enough income. But here's the fix. With a bank statement loan, the lender looks at 12 to 24 months of your personal or your business bank statements instead of your W-2 or your tax returns. That means that your real cash flow, not your write-offs, dictate whether you qualify. It's perfect for business owners that look broke on paper but are thriving in real life. Now, yes, you possibly have to put a little bit more money down, but for a lot of people, this could be the difference between buying a home or staying in the sideline. And that brings me to the loan that is perfect for investors, the one that is dictated by your property's income, not yours. This one is a favorite amongst investors, the DSCR loan, or debt service coverage ratio loan. Instead of using your personal income, this loan looks at the property's rental income to qualify. Lenders compare the rent coming in to the mortgage payments going out. And if the rent coming in covers your mortgage, you're in great shape. It's a simple ratio, the rent divided by the mortgage payment. And if the number that comes out is 1 and above, then the property pays for itself. So if you own multiple properties, have complicated finances, or want to buy through an LLC, DSCR loans are a powerful way to scale up without having to worry about debt-to-income ratio or even job history. Rates can be slightly higher, but you're trading paperwork for freedom. And speaking about freedom, let's talk about the loan that gives you the fastest access to funds, but it comes with warnings. Hard money loans are all about speed and flexibility. They are typically used by house flippers and short-term investors who need to move quickly, sometimes closing in as little as a few days. Here's how it works. Instead of qualifying based on income and credit, lenders base the loan on the value of the property. That means less documentation and faster approvals and access to deals that others might miss, especially properties that wouldn't qualify for traditional mortgages. Now, here's the flip side. Higher interest rates and shorter repayment period, usually 6 to 24 months. That's why these loans are perfect when you have a clear plan. Either you're gonna sell after you renovate the property, or you're gonna refinance once the value of the property goes up. Used wisely, hard money is a tool for opportunity, not long-term solution. And that brings us to the last one, for buyers that are not even based in the U.S. If you're a non-U.S. resident looking to buy a property here, whether it's a vacation home or an opportunity for an investment, this one's for you. Foreign national loans let you qualify with foreign income and assets without having credit history. That is a big deal for international buyers who want to invest into the U.S. market. You usually need a higher down payment and higher interest rates, but for many, this is the gateway to international global opportunities. And if you've made it this far, this is where everything ties together, because this last point is where smart borrowers win. Whether you're self-employed, investing from abroad, or flipping properties, one of these non-traditional loans could help you get in the game now instead of waiting for the perfect condition. But here's the key insight most people miss. You are not locked into the loan that you start with. If you position yourself correctly, build equity, improve credit, stabilize your income, you can refinance later into a lower rate or better terms. That's how investors and smart homeowners use today's options to create tomorrow's flexibility. So don't let the first no from the bank stop you. Sometimes all you need is a different approach and the right strategy behind it. If you're wondering which one of these options fits your situation or how to structure your finances so that you can refi down the line, reach out. I'd be more than happy to help you out. And if you found this video useful, give it a like and share with anybody that can use this information. And subscribe to stay up to date with more strategies like this one. Once again, thank you for watching Francisco's Key Insights. I'll see you next time.